Okay, good morning then, and let's get this session off and running. Just looking around the charts first, we'll talk about the EU summit and so on shortly, but we're actually still getting this bounce that began yesterday on risk assets, and I'm just looking at, say, the S&P on my left-hand chart, top left here, just pushing to new highs here, reclaiming more of those massive downside that we saw Friday and Monday, of course, but risk assets still trying to push. Here's the pound. I've got these charts set to like a 240-minute time frame just to bring in the referendum fallout. And the pound had a decent bounce yesterday, although when you put it next to the collapse, really it's nothing. We're bobbling around the bottom here on the pound, but equities have fared better for sure. I mean, the S&P here trading up at 2033. Here you've got the Euro stocks on the right-hand chart. I've got this on a weekly chart because I just wanted to point out a couple of things for the Euro stocks. Firstly, obviously the key level that was the February low, 2,670. This is on a weekly continuation, and that's really what defined the bottom. We did go below that. We did make new lows for the year. We're down to 2,645 there on Friday's session, but this week Monday's low, bang on that February low. That's a really important price down there at 2,670. Now, we've launched quite nicely here back to the upside, but we've got, just going to draw another line in here actually, because we've got another kind of key level which we have just edged up through. And this is the April low, and it was also then the kind of pre-referendum low, if you like, the low from the week before the referendum. And that's around 2,778. We just edged up through that this morning. So you've got a little bit more of this kind of, it's a bounce. You might have heard people referring to it as a probable dead cat bounce, in that, is it a temporary respite before we then have another push to the downside? This is the big question for traders at the moment, isn't it? Have we seen the worst, or is this a pause before more carnage? And I don't think many people are prepared to be confident about answering that question. I would say, as it stands, I think I don't think this is the end. I think we're a long way off this process getting resolved. I've got a couple of graphics to show you on this front, actually, just to kind of bring things into perspective a little bit. So this is just looking at, obviously, a map of Europe, but it's looking at the political situation. Obviously, in the UK, I talked about this yesterday. You've got a continued, just collapsing Westminster. I mean, Corbyn. How is he still leader of the Labour Party? It's just it's getting embarrassing for Corbyn. They had a vote of no confidence yesterday, and out of 212 Labour MPs, 172 voted in favour of no confidence. So only 40 actually voted in favour of Corbyn, and yet he's still clinging on. I don't know what he's thinking. But obviously he's delusional, or he's in denial, or I don't know what. But surely he cannot be Labour leader for another 24 hours. It's incredible. But Labour continue to be in absolute disarray. But really the focus yesterday was on the EU summit with Cameron. But this is just quite an interesting graphic where you've got the red circles with an envelope in it. That's where you've got far-right movements. This is where you've got countries where far-right parties are gaining momentum, and that's not just this year, that's been over the last few years, and far-right parties are wanting their own EU referendums, where you've got these kind of green circles with handshakes. This is where some parties want EU membership terms renegotiated. That's what Cameron wanted, but obviously he failed. You've got tensions in other areas with regards to Gibraltar and Spain wanting Gibraltar back, for example. There's tensions obviously in Calais from a kind of refugee crisis and a migrant crossing point. There's tensions in Ireland with regards to Sinn Féin in Northern Ireland wanting to take Northern Ireland back into the Republic of Ireland. Obviously, Sturgeon in Scotland. She's meeting Jean-Claude Juncker today. This is expected to be at around about 5 p.m. European time. That could be a pretty interesting meeting. You know, how serious is Sturgeon about going ahead with a second independence vote, with the angle of looking to have Scotland remain in the EU. So all this is kicking off, all this is going on. Now, I just want to flick to a second graphic. This sums things up quite nicely, I think. You know, if you want to answer that question, where do markets go now? You know, have we seen the worst? Is this just the beginning? You know, how do you answer those questions? And I think either it could well be the worst is over, or it could be this is just the beginning. I mean, either outcome is certainly possible. It's just a question of where the political scene shifts. And I think this graphic here puts that in quite a decent sort of set of potential moves. So on the x-axis here, you've got the exit. That's the Brexit. That's UK leaving the EU. And how does that process go? Is it an amicable exit? That's on the right-hand side. Or is it a confrontational, fractious, ugly exit? That's on the left. Then you're looking at, on the y-axis, you're looking at the EU. So forget Britain. They're out, let's say. What happens to the rest of the EU post-Brexit? Now, if you go up on the y-axis, this is where actually the rest of the EU gets closer together. There's more integration. And then if you go down on the y-axis, this is the opposite. This is where actually Britain triggers disintegration and potentially, you know, other countries leaving and, you know, potentially the whole breakup of the EU entirely. So here are your kind of four directions. From a market's point of view, forget the politics for now. From a market's point of view, top right best. That if it's an amicable exit arrangement with the UK plus the rest of the EU get pulled tighter together. Economically, that would be the most stable. This is where you're going to see market reactions stabilize quickly. So when you're thinking about the political developments over the next days and weeks and months, if things are angling more to the top right of this graphic, then this is going to be good news for financial markets. You can expect calm to be restored quickly, and, you know, good buying opportunities off some of these phenomenal moves. We were talking about the fact that in the UK here, home builders, estate agents, airlines, banks, they've all been absolutely hammered. Mid 30% sell-offs. You know, if we shift to the top right of this graphic politically, some bargains have been picked up down there. However, unfortunately, it's not that easy, because what happens if we shift to the bottom left? That's the worst case scenario. That's a really angry Europe penalising the UK. The thing about the EU, what we've got to understand, or you have as an investor or a trader, is ultimately, you know, if the UK leave, then what the EU do not want is this to be a precedent for others to leave. So it's very much in the EU's interests to give Britain a really bad deal to basically warn off anybody else trying it. So, you know, you could certainly see that being the case, and certainly the likes of the Belgians don't have much patience for this, and they want the Article 50 to be triggered now. Let's get on with it. You know, they're not happy. They don't want the Conservative Party to dictate the pace of the process here. So you can easily see ebbs and flows to either side of this graphic, and this is what's going to create the ups and downs and most likely the continued volatility. You know, don't think this is over. Don't think a couple of days of carnage and then we just get back to normal. You know, I think this will be a scenario that plays out over weeks and months, and you're going to get swings to either side, and this is going to create opportunity on the upside and on the downside. So I think for now, let's get rid of that graphic. I think for now, you know, markets are just it's like the hangover from the collapse. The dust has settled. We've had the press in the UK and us even talking about the fact that actually we might not leave. Boris may be looking to use this as a negotiating tool to get his deal on migration control, but stay in the EU and enjoy the single market. But I think from the EU summit last night, that's looking quite hopeful. Can Boris have his cake and eat it? Can he have migration control, but also continue to enjoy the full access to the single market that we have now? And the European leaders are basically saying no. I think ultimately that EU summit last night, it seemed all very friendly. It did seem a little bit like Cameron's farewell. It was like the UK's farewell. A lot of the other EU leaders were making speeches about, reflecting on the UK's involvement in Europe over the last 50 years, over the last many hundreds of years, and citing how the UK had been such an important part of it. It was very much a farewell kind of dinner, not only for Cameron, but actually for the UK. I think Merkel's comment was quite interesting afterwards, and let me just find that again. So I had it teed up to quote it, and now I've lost it. So so here we go. Merkel came out and said afterwards, as of this evening, I see no way back from the Brexit vote, and that this is no time for wishful thinking, i.e., maybe there's a deal to be done. Cameron blames the migration issue as being the factor that led to the Brexit vote. That's what he told the EU leaders last night. Merkel basically saying this is no time for wishful thinking, i.e., maybe there's a solution here and the UK can stay in, but to rather grasp reality. So I think it's quite a sobering comment from Merkel, and we'll see as we move forwards, because today, and the key thing about today's session is we have the continuation of the EU summit, but without Cameron. There's no Britain there anymore. So comments coming out of that summit today are key. Are they going to be favourable, positive comments suggesting there is an amicable exit? Is there going to be any hint, and this is the really big important one, is there going to be any hint the EU are willing to back down on migration to keep the UK in? If that happens, then you're going to get dramatic reversals and rallies in risk assets. I just don't think that's going to happen, not today. It might happen later, in weeks and maybe months ahead, but I think it's way too early. If it were to happen, if there's any hint the EU are prepared to do a deal here, well then sure, all these sell-offs aren't valid and they get reversed. So for now, big bounce yesterday. Well, a big bounce on the face of it, but actually in the grand scheme of things, when you put it alongside the collapse, they're small bounces. I want to just show you, these bounces are on low volume. Good graphic here. Let me just bring it in. Hang on, give me one sec. Good graphic on volume when you're looking at how these markets behave. Okay, I'm struggling to get into screenshot. Give me one sec. Some technical issues here. Here we go. 10 minutes time. This is the S&P 500's bounce. What we're looking at here is obviously the market itself, but then you've got volume analysis. This is zero hedges. I mean, typically over aggressively bearish spin on it, but they've got the arrows in the right directions on volume. Obviously, you're going to get massive, dramatic volume in the fallout. The Friday volume was just off the scale. Monday's volume very high, and okay, volume's obviously dropped, and obviously, and of course, it's going to drop. What should be a better measure is take out the unique volume of the fallout Friday and Monday and compare yesterday's volume to volumes we saw before the Brexit, and actually you might get a different analysis. But still, what Zero Hedge are trying to suggest here is this is a dead cat bounce. This is now the upside is on much lower volume, therefore it's not sustainable. The momentum will peter out, and the downside's only just begun, and we're going to get another smash down through 2000 and down to 1900 and who knows where. This is Zero Hedge's spin. The volume analysis yesterday, if you want to interpret like that, then you certainly can. So we shall see. One other factor, just to kind of talk about something other than Brexit, if that's possible. Let's talk about oil. Here's a look at oil. A decent session for crude yesterday. If we just go to a daily chart, we've lifted off. We hit $46 on Monday. We've lifted. Actually, yesterday's rally was a bullish engulfing candle. We closed up above Monday's high, which is important technically. We've added to that again this morning. So crude on the up. Now let me just show you a chart of the from last night. So we had API numbers last night. Here you go, drawdowns for both crude, the headline number, drawdown for Cushing as well. Bullish, I guess, for price. And just looking at the number of drawdowns we've had on that headline crude number in a row now, that puts it at 6 weeks running, 6 weeks straight, and actually 7 of the last 8 weeks we've had drawdowns in crude. So this is helping with the movement this morning. It's helping to continue that decent bounce we had yesterday. So we'll be looking for the Department of Energy numbers this afternoon, of course, at 3:30, and we can maybe just get back to some other stuff other than Brexit. But obviously Brexit will dominate. The EU summit continues, Sturgeon's meeting, Juncker, and these are key developments that we're going to have to keep an eye on. So for now, the dead cat bounce, let's call it, is still alive. Maybe we're on the 8th or 9th life of this cat. I would say that I think it's wishful thinking if you think the carnage is already finished. I'd say volatility is certainly here and has not gone away. I'd be very surprised if we didn't get episodes of downside to come in the days ahead. Yes, we'll get some upsides. You know how these things work. The ebbs and flows of this political nightmare will play out, and we'll get ups and downs accordingly in the markets. So plenty of opportunities ahead. Just stay patient, wait for the key developments to occur, then be aggressive at the right times. All right, enjoy the day.